WTF Tesla stock. Tesla is currently down about 2%. This is supposed to be the golden age for Tesla, the golden age for investing. At least that's what I was saying heading into today. And I still think that is true. Now, Tesla is really underperforming today, considering a lot of stocks are doing very well today. Tesla is one of those standout, just really rough names. Here in this video, I will explain what is going on, if this is going to last, if you should be concerned about this, or look at this drawdown as an opportunity. We will share with you the option activity, the short positioning. Short sellers are actually covering today, upon last check. That's saying something. We also have some breaking news for Tesla stock with a new $500 price target upgrade from none other than Piper Sandler. Ladies and gentlemen, the work is cut out for us here in this video. Do me a quick favor, hit the like button and subscribe to the channel if you have not done so already. Let's go ahead and get started. Now, first and foremost, you could really categorize today as a broad-based rally. So what I had said heading into the election was, after the election, we were probably going to get a market rally. And that's what happened. Now, late last night, there was some news of a 25% tariff that could be implemented by February 1st on Canada and Mexico. That to me looks like a pure negotiating tool, and certain sectors will be tariffed. Other sectors will not be. It's not going to be, in my opinion, a broad blanket tariff on Canada and Mexico. That's my opinion. That's to be continued. That did cause futures last night to fall about 1%, almost 2%. You were up almost 1% on the NASDAQ and fell about 1% instantly when that news came out. So Wall Street's still hyper fixated on tariffs. We did recover a bit from that. And at the time of recording this video, the RSP, which is the equal weight S&P, is up 1.11% today. So that's a strong move. We haven't seen a move like this since at least December 20th. And the RSP had fallen 8% from high to low, from peak to trough. So today is a recovery. We're breaking out to the highest level now we have seen since December 13th. So over a 1 month high now. The S&P is continuing to break out as well, and the SPY looks really good here. We'll discuss that a little bit later on throughout this video, and that's what makes Tesla's 2.5% decline today stand out so much to investors. In all reality, a 2.5% down day is nothing for Tesla. And first and foremost, I want you guys to think about it in that terms as well. If this was really bad, if something was really just going south here for Tesla, if something was flipping, Tesla would be down more than 2% today. Like a bad day for Tesla is like a 7 to 10% down day. So today, it does stand out, but it's not that bad in the grand scope of things. Now let's start with the most likely thing that is causing Tesla's stock to fall today. Before we get into your good news, let's start with a little bit of bad news, because why not? Squawk Square on X says, I would put money on if Elon didn't do his very controversial gesture yesterday, Tesla would be green. I commented and said for sure. I do think this is the biggest negative, sentiment factor today for Tesla. And if you guys are unaware, I don't even really want to play it, but I will. Basically, during Elon's speech at Trump's inauguration, he did a gesture that looked like it was a Nazi salute. Okay, that's not what it was. That's not what happened. If you watch the full clip, he was making a gesture from his heart, that more a passion gesture than anything else. But mainstream media went flying with this. They threw the kitchen sink at Elon, calling him a, well, I'm not going to say the word again, the N-word, okay? The 1945 N-word, if you will. And that just is leaving a sour taste in people's mouths. I do think the algorithms are behind a lot of this. Negative sentiment means short the stock. There was also news yesterday via Trump's executive order that he is going to end the 50% EV sales target by 2030 and presumably start rolling back a lot of the EV subsidies. That also could hit the headlines and be seen as a negative thing. But if you are a true Tesla investor, you know that's not a negative for Tesla. People don't buy Teslas because of the credits that you get. Okay, people buy Teslas because they like Teslas. They have far superior technology. They make a far superior product than other vehicles. That's why people buy Teslas. Other EVs, though, are going to be in a harder position as they are not profitable. Now, Jeff Lutz posted this status here on, or this post on X. He says, be careful, folks, on EV/clean energy stocks. Most media and people that call themselves analysts are doing one-dimensional work to fit into 160 chat tweets or character tweets and have hot takes. Sensational media headlines drive clicks. Hedge funds know this and are capitalizing on both sides of the trade. Reality is more detailed. Number one, the ZEV credit system is a global thing. Our new president is not the president of the world. The US ZEV credit system is actually born by states. 17 of them copied the California CARB standard, and they're most likely Democrat-run. Nothing here will change overnight, and any executive action will be immediately litigated and held up in courts for years. That's my take. Open to hear how that could be accelerated. Number two, the $7,500 EV credit plus battery IRA credit. Two different things. Both operate under a law passed by Congress called the IRA. The Treasury Secretary has discretion on some things related to the list of approved vehicles, but has to operate under the framework of the IRA law as written. As for repealing it altogether, Republicans only have a one-seat majority in Congress. Most of the battery factories are in red states, by the way. So the logic has to be one-seat majority holds, and Republicans from the districts that have these battery factories are going to vote in a direction to close their factories and put their own constituents out of work. Consider the odds of that carefully. Basically saying, you're probably not going to get the $7,500 EV credit repealed. And at the bare minimum, even if you do, you're probably not going to get the IRA credit for batteries that get repealed. Number three, the quickest path for this administration to force auto work to move to the US would be to tariff parts, sub-assemblies, and complete vehicle imports from Mexico and Canada, where about 1/3 of cars are made by the big three that are made for US consumption. This is the most likely scenario to happen first, and with greatest probability as both US auto employees and the union bosses would support. This most adversely impacts Ford, GM, Stellantis, who have a significant production footprint in Mexico and Canada. Tesla held up on building their factory there. 100% of Teslas on the road in the US are made in the US, but I imagine they'll have some suppliers in Mexico to transition operations to the US. So Tesla, while they're not as negatively affected as Ford, GM, or Stellantis, they can have some impact, but it would likely be very minimal. The president specifically mentioned possible 25% tariffs on the US and Canada yesterday in the Oval Office. He can tariff on top of the USMCA deal, but it does get complicated and the US will be sued by foreign government. So Jeff Lutz there on X is basically saying, and putting the facts behind it, that even if the president wanted to really go hard on some of the EV push through that has happened in the past couple of years, it is going to be a hard and long drawn out process. Nothing is really going to change overnight. Even though I do think repealing some of these things could be positive for Tesla in the longer run, as Elon Musk has said, because again, Tesla does not need these to survive like other EV companies do, it could be having a negative impact on Tesla more so versus a Ford or a GM, because Tesla sells a lot more EVs. Ultimately, I do think the biggest negative driving factor of the day today for Tesla is negative sentiment around Elon Musk. But we actually have some very positive news today, and I will share that with you now. Piper Sandler raises their target price to $500 per share for Tesla, compared to $315 previously. They say, quote, "We've raised our price target to $500 from $315, reflecting optimism about Tesla's AI and real-world applications. However, short-term estimates are shaky, and long-term growth hinges on new ventures like Optimus robots and AI services. We're now using a PE valuation model, setting the $500 target at 120x full-year 2026 earnings EPS. Clarity on new products next year should shift focus to Tesla's AI advancements." Now, what's also pretty remarkable, considering Tesla stock is underperforming so much relative to the broader markets, is you actually have almost 200,000 shares today that are on net being covered. You have 987,000 shares being covered today, 823,000 shares being sold short, which brings you almost to 200,000 shares on net that are being covered today. So hedge funds, institutions that are short in Tesla are taking the opportunity to cover on those short positions. They're not adding to them, which I think is a good sign on any red day. Now, short interest of free float sits at 2.4%. You have $28.5 billion sold short in Tesla currently, totaling about 67 million shares currently sold short. Now, we do have a little bit more of the update from Piper Sandler's note out today. Piper Sandler believes the long-term narrative often takes a back seat when current year estimates are falling, and in this regard, the outlook is highly uncertain for Tesla. Once Tesla fulfills its current launch pipeline, management's focus will shift away from launching new cars and towards popularizing full self-driving software. To reflect this, Piper is now modeling a contribution from full self-driving licensing. It values Tesla's existing businesses as just below $300 per share, inclusive of full self-driving. Piper says it hasn't attempted to forecast a contribution from Tesla's more ambiguous autonomous or artificial intelligence opportunities. It is clear, however, that Tesla's thesis will ultimately depend on new age opportunities like Optimus robots and neural net training as a service, the analyst adds. The firm says that while Tesla's first half of 2025 may be choppy, the stock remains its top buy and hold idea. Also in the news today, Tesla China insured 10,000 Teslas last week, which is pretty much in line with similar numbers that we've seen in 2024, but well ahead of what you've seen in 2023 and 2022. So we're off to a pretty good start so far. Again, just to put some clarity on this, none of the 196 executive orders signed by Trump today target the $7,500 federal EV credit. The text below from his Unleashing American Energy executive order focuses on pausing spending on electric vehicle charging infrastructure. Trump can alter the EV credit eligibility rules to some degree, but he will need to get congressional approval to completely cancel the EV credit since it's a passed law. He can't just cancel it himself via an executive order. And let's be honest, has the government ever helped Tesla create, large amounts of charging infrastructure? Like, that's a joke. The government's never really helped Tesla in that regard. Merritt says that he got back from dinner and there was already 1,000 articles written about Elon Musk's salute. This is dumb manufacturing outrage. He says Elon was just saying, quote, "My heart goes out to you." Buckle up, y'all. It's only day one. And yeah, we're seeing that affecting Tesla stock today. Now, I do ultimately believe this will be a short-term thing. This is not going to be the dagger in the coffin for Tesla, if you will. Now, there is still the rumor, though, that Elon could potentially be buying TikTok. Now, Trump's kind of gave a 75-day extension to the TikTok ban, but he's made it pretty clear that a U.S. company needs to partner with TikTok about 50-50, and it looks like there could be multiple kind of partners from the U.S. side. This could be Elon and Zuckerberg, which that would be crazy. This could be Elon and, some of his closer buddies, right? But there will be some kind of deal struck with TikTok. And some people say the logical, person here is Elon for this. There's no certainty on that. It's still a rumor, but the fact that Elon has not commented on it yet at all does kind of create some nervousness. Even if Elon had to sell 20 billion in Tesla stock, which is not that much relative to Tesla's overall market cap of over 1.3 trillion. You know, is it a big deal? Not really, but we know what happened the last time Elon was selling Tesla stock to buy Twitter. So I do think that's ultimately a really good catalyst if Elon does say he's not interested in buying TikTok. But until then, I think there will be some underlying nervousness until that is fully shaken out, if you will. It's the bad headlines about Elon, the bad headlines about Trump's executive order yesterday, still the ongoing rumor that Elon could be buying TikTok. Like, literally, guys, like people I know in person that own not a single stock, that barely know who Elon is, were telling me that TikTok was not going to be banned because Elon was going to buy it. Like, go talk to people. Okay, ask them who they think is going to buy TikTok. I don't know where the hell this was spread, maybe on TikTok itself, but people think Elon is going to buy TikTok. Like, that is actually a thing from the non-investment community standpoint. Also in the news today, Trump is set to announce $100 billion of private sector investment led by OpenAI, SoftBank, and Oracle for AI infrastructure, with Stargate Venture to invest up to $500 billion over 4 years, starting with a Texas data center. Now, sentiment today for Tesla is neutral at 52 over on StockTwits, which is better than you would expect, and it's better than yesterday. Yesterday, you were bearish at 39, so you're actually seeing a sentiment improvement. Message volume is higher today at 65, compared to yesterday, it was low at 39, and I think that's obvious. People just are trying to figure out what's going on with Tesla today, because we all expected Tesla was going to do well, albeit it probably should have done well today. I think the negative things affecting Tesla are way overblown today. And a lot of it could just be algorithms, especially in regards to Trump's executive order actually being bad for Tesla. We know that's not bad for Tesla. And we know tariffs really are not going to affect Tesla all too much with Canada and Mexico. We can see Tesla continues to run about 4,000 different ads with Google, and Tesla's global inventory numbers have recently shot up quite a bit. The Model Y at almost 12,000, which is the highest it's been in the last 12 months. The Model 3 at 6,400, which is almost a 12-month high. The Model X at 5,400, a 12-month high. And the Model S at about 3,500, which is almost a 12-month high as well. Cybertruck sitting down here at about 1,000 vehicles in total global inventories. And really, I think this just suggests that Tesla is manufacturing more vehicles. We've seen a collapse in Tesla's inventory in Q4, and Tesla produced, or sold, I should say, sold more vehicles than they produced in Q4. And that coincided with an inventory reduction in the numbers that we actually got, and that was reflected in this data. So I think when the inventory is rising, I just think that means production is rising, that not necessarily that you're building up massive amounts of inventories, if you will. Here on the day today, CNN's Fear and Greed Index is still in fear at 41, and the percent of stocks trading above their 50-day moving average is at 48%, which means 52% of stocks are still in an active decline, which is kind of crazy considering how much green there is today and how close markets are to new all-time highs. It really just, it's like, wow, maybe there is a lot more of a rally to this market that we could see before things are truly euphoric. I think we're far from that. Now, from a technical perspective for Tesla, things actually don't look terrible today. They're actually still pretty well intact. You could see Tesla is holding above its 20-day moving average. It's finding support there today. That 20-day moving average is at $416.36. Tesla is currently above $417 at the time of recording this video. So staying above that 20-day moving average is important, and that is bullish for Tesla stock, considering we kind of struggled to get above this 20-day moving average ever since December 31st. Even though today is a red day, you're holding support at that level. I would say that is bullish, and it does set you up for a run, potentially again still into the 460s, maybe even the 500s relatively soon. But we do have to shake off some of this bad headline I don't even know what to call it, this cocktail of bad headlines facing Tesla that are really not true to begin with. I think it's mainly, again, the algorithms that are reacting to this, and then everyone else is kind of looking around trying to figure out what's going on, and it's not a lot of people that know what's going on. And I think that's why this is such a critical video, because there's a lot of good things going for Tesla right now, and the good things are being ignored. The bad things are being overblown. That's kind of the way that I'm looking at this. The RSI is currently at 53.5, so you're pretty much neutral overall for Tesla, suggesting there's plenty of room for a rally. Now, when you look at the headline S&P, things look really good here as well today. You're above this trend line. You got above that on Friday, held support there. And you can see today the sellers tried to take over in the beginning of the day. They drove the market lower, and then the buyers came in and bought it back up towards the high of the day to close out the day. Whenever you see sellers take over and then buyers step in and take over, that tends to be a good sign for a continuation rally. So with that said, ladies and gentlemen, let me know what you think about this information down below in the comment section. We will keep you up to date and up to speed in what's going on with Tesla and broader markets and all of Trump's what could be executive actions. But yeah, that is what we have so far today, ladies and gentlemen. Let me know again what you think down below in the comment section. If you are taking this opportunity as an opportunity to buy Tesla stock lower while the markets are trying to figure out what's going on, or if you think this is the start of something larger. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.